David, thanks so much for joining us.
Sure,
so,
great to be with you.
Investors, analysts today, we're very intent on finding out what your outlook is for integrating this company and how to really measure growth here this year. What's the main takeaway?
Sure, so we gave them a good profile of our 4 operating businesses, the fact that we have a great growth outlook in front of us. In fact, we said we were on track for our 6 to 8% revenue growth and our double-digit EPS growth over the long-term horizon. And really importantly, we're on track to deliver about $8.5 billion of free cash flow just a year out from where we stand right now. So all is tracking well.
One of the things that you talked about were really an ambitious growth outlook for Medicare Advantage plans, so private plans in Medicare, 10 to 15% over the next couple of years.
Yes.
How are you attacking that?
Yeah, so we've spent a lot of time the last 2 years strengthening the base of our Medicare business, which is really focused in a few markets in the United States, about 12 markets. We have the ability now to expand that business into a lot of the markets where our commercial business is thriving and our physician partnerships are thriving. And we've built the capacity now in our seniors business for rather significant geographic and product growth over the next 5 years.
And the uncertainty over how the Medicare drug plans are going to be priced in terms of rebates next year, that's not causing a problem. Here it is, we're about 3 days away from filing deadline and we still don't have the new rules.
It's an odd dynamic, right? There's uncertainty, but the macro headline is it's not an issue. We're positioned to be able to handle either with the new rule or without the new rule. And whenever there's clarity, we'll be able to make an adjustment to it. So we're following the guidance, which is bid as if there's no rule. If a rule comes in late in the process, we'll have the technological flexibility to pivot and shift and make sure we can serve our customers.
One of the other areas where you want to grow big in the next year is China, and you operate in 16 provinces there. How does this trade dispute and just the acrimony between the U.S. and China impact your outlook as a global company trying to operate there?
Sure, and I appreciate as a global company because we're a large global company. We serve people all over the world. China is our fastest growing market. It's our second largest individual market. Important to us, we're a very localized business. So we don't run our international business from the United States. We don't even run it from an international headquarters. We run it in country. So the CEO of our operation is Chinese. Our joint venture partner is the largest non-state-owned bank. We have 6,000 colleagues in country, and we're a part of the social fiber of the country serving the population with health and well-being solutions. And to reinforce that, we've actually grown over 30% per year for the last 3 years. So the current disruption is essentially not affecting us.
And you don't worry about the rhetoric coming out of Beijing about, companies that they might now target in retaliation for Huawei?
Well, that's a different question. I don't think it's healthy from a global economy standpoint to have attacking or rhetoric back and forth between countries. But again, we're a global company and we've seen pockets of instability over years. The important part is having a business model that is highly localized and being part of the local community and providing the solutions that the local community values. That's worked for us for decades.